All right, so here it is, the intraday liquidity theory. It's something that I've been asked about quite a lot, especially since I've brought out, the whole free course. If you want that, by the way, link is in the description. You'll see the free Discord, and obviously from there you can access it in complete detail. But when it comes to the intraday liquidity theory, I'm not going to waste any time at all and get straight into it. So when it comes to this, what is this all going to be about? Usually it's going to be on the 5 minute time frame. That's usually what I actually execute on. And then from there, obviously, we do have a few concepts that we are going to go through. But yeah, that's basically just a brief overview. How can we actually use each trading session to our advantage? The liquidity that forms from these areas, liquidity sweeps, and then obviously getting into our entries. Okay, cool. So starting up, whenever we have our step one, it's all about Asia session. So step one, marking out the liquidity from Asia session. The reason we put such significance on the Asia session is because of this. Asia session is, if you think about it, Q1 of the day. There's 4 quarters of anything. And when you're thinking about, let's just say, the quarterly theory, for example, Asia session is going to be the first part of the day, that first 6 hours. Now, usually I mark out my Asia session between 12 to 5 a.m. in the morning. This is something that's always worked for myself. By the way, this is UK time. Anytime I am talking about any time zones, it will always refer to GMT. So step one, mark out Asia session. Now, usually what we get is we get the high or the low. Because Asia session tends to be quite slow and has a lot of consolidation, we won't get a lot of movement. So we're going to get liquidity forming at both the high and the low. Step two, watch how liquidity on either side of the market is taken and reverses. Now, this is obviously going to be the part where London session is starting to kick in. Well, before London session, Frankfurt session. So around this times, usually what we can expect is something like this, where either the buy side liquidity at the top is taken and reverses, or the sell side liquidity is taken and reverses. As we get through more of these concepts, I'm going to give a few little confirmations that I have in terms of knowing where the direction is going. But generally, one of the best key tips for all of this is follow the trend, especially when it comes to the high time frame trend. Me and some of the other elite mentors, for those of you that have the elite strategy and everything, you would see that we actually mark out our zones on the 1 hour and the 30 minute. That usually works quite well. From that point, we're able to identify the trend. Are we moving bullish? Are we moving bearish? And then obviously, our lower time frame confirmations are simply just a reflection of the trend. We always want to be moving where the market's actually, in a way, predestined to go. Step number 3, it's all going to be about marking out London liquidity. So by this point, if you haven't entered a London trade, you're getting to the session where basically the London key zone is actually ending. Now, I talk about key zones. I'll tell you a little insight onto what I personally use. When it comes to any key zones, this is usually what I like to go for. So for London session, it's going to be from 8 a.m. to 10 a.m. And then when it comes to New York, I usually go for 1 p.m. to 3 p.m. The reason I say this, it's not because I've just come out with these numbers out of nowhere. It's simply because I've backtested it. And I've seen that the most amount of volume comes in these times. And also the types of entry models that I look for, that I obviously explain in my elite strategy. If you want access to that, it's literally £50 down below. I might change that price very, very soon because obviously there's a lot of value in it. But anyways, London session, 8 o'clock to 10 o'clock. New York session, 1 p.m. all the way up to 3 p.m. So these are the key timings that I want to look for. So what I'm trying to say here is, if you haven't taken a London session trade already, usually we can expect that the Asia range liquidity has already been dealt with. If it hasn't and it's still in effect, then of course we can incorporate that into New York session as well. But step number 3, if we're moving on to New York session, we mark out the high and the low of the London liquidity that has formed. So generally what we're going to get is either, for example, from between 8 o'clock to 10 o'clock, usually we would get a high and a low. Now, in this type of market condition where we actually have a nice little trend going on and we're looking bullish, this is quite simple to understand. If we are expecting us to look to buy, what do we actually do? We always look for our sells to be taken, or sell side liquidity to be taken, and then we start to push upwards. And this is exactly what I talk about in step number 4. So step number 4 is always look for liquidity to be swept in from the London session, and can be used for entries going into New York session. So just to reiterate that point again, these are the key timings that you're going to be looking at. If, for example, we are bullish, so we know that we are buying by trend, let's just call it as that. and we get this type of entry model come in. So we got Asia, for example. We get a sweep below Asia. I'm going to include all the boxes afterwards. Then, for example, we've got London. London, let's just say, creates this. We get a sweep below London and then continue upwards. This is the most ideal and the most optimal trade sort of plan that you can look at for the daily cycle. This is obviously what I'm talking about, the intraday liquidity theorem. Why is it called the liquidity theorem? Simply because whenever each session actually finishes, what we usually tend to look for is something like this. We look for liquidity above or below. Once we get sweeps above and below these areas, that's when we can actually start to look for entries. So it's always after we get the sweep of that liquidity, whether it's the high or the low. Now, like I've said again, and let me reiterate this, if we are in the buy trend, we are going to look for sweeps of the lows. Why is that? It's very, very simple, because when we are moving in a certain direction, what smart money would usually do, or the institutions, this is the way it's taught. Personally, I have my doubts about certain things, the way they're taught about ICT and even SMC and everything. But when you really look at it, it does work on the charts. So whether the explanation is one way or another, it really doesn't matter. But anyways, we are looking for sweeps of the lows. Why is that? Because there is resting liquidity just below. Once that is taken, essentially the market is now primed to move the other direction because it's dealt with its job. It's already finished its job that it had to do just below these lows. Now what it's aiming to do is push to the next level of liquidity. Now these are determined either by the intraday liquidity, which could be around these type of areas, which could be around these types of areas over here. So for example, it could be from the high. Or for example, we have, let's say, further price action that was earlier on in time. You know, obviously we're looking at a buy trend, so we're going to be at a specific time in the market. This is the type of area that we would be looking at. So again, when you are looking for your take profits, just be careful to not put it exactly at, let's just say, a 1 to 2 or 1 to 3. It can be variable. And obviously that variability is always dependent on what previous price action has shown us, as is the case with any other type of analysis. So that is pretty much the gist of the entire thing. Now, can it work in a different direction as well? It doesn't always have to be, for example, where the sell side liquidity has to be taken. Now, let's just say, for example, this is the type of model we got, but instead of being in a buy trend, we're actually in a sell trend. What would I actually look at? And I have a very, very good case study of a personal trade that I sent out to the team. So if we're in this sell trend, so let's just say, for example, let's just mark out some of the, let's delete some of this stuff. Let's just mark out some of the more complex price action. Let's just say, for example, we were something like this. So obviously you can see we are now in this downtrend. We're having a bit of this pullback. Can we actually still look for buys? Yes, you can look for buys in the intraday cycle, but always remember the trend. So what I mean by this is this. Say, for example, London session has created this high. We've swept the lows. Yes, we can take buys up until a certain point, but because we are following the trend, no matter how the intraday cycle looks, I would much rather look for the buy side liquidity to be taken, and then eventually price will actually drop to the downside. Where will it drop to? Something like this, for example. Drop all the way down to this sell side liquidity over here. So it is as simple as that. Now, let's just get into a quick little case study that I've had, and it was all sent out to the premium members. And as you can see over here, for example, every single time I have sent out any entries, all of these have been noted. Enter the GU sales, for example. Again, every single time I do have a personal entry, this is the type of thing that I do. Obviously send it out to the rest of the team so they can get into the same trades as me. But to quickly break down, let's just have a little look at the completion of this trade. So what it was, we were in a downtrend. Now from that downtrend, we got Asia session. The low was swept in the morning. So you can take a higher risk move because you're moving against the trend, right? You can take a higher risk move. You can understand that, look, we've had a sweep of liquidity over here. We have equal highs that we can actually aim for. So up until this point, relatively, you could have some medium risk. Obviously, you are moving against the trend, so that's not always the best thing sort of to have in mind. But what we can actually see over here, London session created this high and this low. Rather than sweeping any of the lows or anything, what it decided to do is to continue just above London session. It swept the previous daily highs, as you can see over here. Once we actually got that sweep, we started to get some confirmation to the downside, and then eventually we started to enter. So this is the last thing that I'm going to be talking about as part of this presentation. So how can we actually use it? Remember, liquidity sweeps or inducements of the session high or low can be used to potentially give a setup in the next session. So it's always the last session, liquidity sweeps, gives us knowledge for how we can enter in the next session. Once we see an inducement / a liquidity sweep, it's all about using the low time frame confirmations and getting into the trade. The number three, this is the one rule that you have to stick to. This works best when you are following the trend. No matter what strategy you are using, if you're following the trend, your probability increases much more. Again, why? Because, the market, whether it's fundamentals, whether it's the high time frame narrative or whatever, you're going to be pushing into a certain direction. So why would you go against it? Please note, these liquidity sweeps of previous sessions don't always happen. As you've seen, for example, in this little case study over here, the London session sort of lows was not actually swept. We continued upwards. It swept the London session highs, plus it swept the previous daily highs. One little note I would give as well, you see how price actually moves above? When it gets to these kind of areas, yes, we sweep London highs, but it's quite a significant sweep above. So for me personally, the main confirmation I did have here was actually the sweep above previous daily highs. So that was the main thing. Don't get that confused. This is this little bit over here, I would consider as a liquidity sweep above the highs. But because we swept another piece of structure, I would definitely say it refers more to this kind of area. And again, guys, you can see with a lot of the models that I do use, for example, just with this little example over here, and it turned into a 1 to 5 risk to reward. It was just as simple as well. All we had a sweep of the previous daily highs. As soon as price started to move upwards, during London session, we actually got a nice sweep above over there. Price gave us some confirmation to the downside, and then obviously, as you can see, a nice 1 to 5 risk to reward completely sent out to the team. So last little note that I will give over here. Now, how could you have entered this in this market during this day? Now, I've given a few examples of what my elite strategy trades would have actually looked like. And the whole idea behind it was simply Asia session gave us a certain highs and lows. We swept these lows. Once we actually got these confirmations, I started to enter. Then when it comes to London session as well, the London session range was swept, as you can see over here. Once we got our nice little lower time frame confirmations, that's when we started to enter. So guys, that's going to be it for this video. I hope you got a lot of value from this one. Definitely refer back to this lesson. And also one little note, every single thing that I am talking about over here has been given for completely free over here. Whether it's the free PDFs, whether it's the free course. Guys, join the free Discord. There's a lot of value over here. And literally a whole community of over 3,000 students. When it comes to the elite traders as well, I believe we have over 1,000. So yeah, that's the kind of split that you can see. But yeah, guys, take care and I'll see you all in the next one.